Okay, I'm going to start this video today with a story. It's the story of Gaurav. So he's a colleague who came to me the other day and he's like, Pranay, I've seen your videos where the masterclass with Mandeep on health insurance and life insurance. I understand the fundamentals, but can you go a step further and can you help me out more and just spoon feed me the policies that you would recommend? I'm sure you've done your research. I'm sure I trust you. Can you just please tell me the policies? Today is a video for all the Gauravs out there. If you're a Gaurav, please drop me a hi in the comments. You should watch this video for 3 reasons. 1, you will actually get an actionable policy by the end of this video. You can go ahead and buy it right after. 2, you will get tips and tricks on how to save on premium without compromising the coverage amount or the quality of the insurer. And 3, you will get a spreadsheet. At the end of this video, I'm actually going to be walking you through a spreadsheet, which is my research. So I'm going to share all of that research with you. Stick with me. 3 reasons for you to watch. Please stay till the end. Hopefully you'll find this useful and valuable and share it with somebody if they are in the market for a policy. This channel is brought to you by the 01 Media Network by Zerodha. With their support, I'll be helping you spend your money wisely. Okay, back to Gaurav. There are 6 things that I want to lay it out there before we jump into it. 1, Gaurav wants a family insurance policy. So essentially he wants to cover himself, his wife and his son, 35, 35, 2. Those are the broad ages. 2nd, he doesn't want a policy for his parents because his parents are already covered in a separate policy. So this policy will not include them. 3rd, he lives in Gurgaon. Very important given the medical costs here. 4th, he wants a policy which is about 1 crore in premium. He's not looking to get a small cover. He wants a policy cover which is 1 crore. So we will be looking at premium policies that give such coverage. 5th, he wants peace of mind. Very important. He doesn't want to save a few thousand rupees right now in paying premium and then regretting later if the company doesn't stand by their promise. So he wants assurance and he wants quality and he wants peace of mind and he's willing to spend for it. So that's another filter to keep in mind as you watch this video. And finally, he has no pre-existing conditions or any medical conditions, and that's going to have an impact on the policies we select. So with that out of the way, let's jump into it. When we did the research, I found 30 companies out there that give a health insurance policy. 24 of them are general insurance, 6 are health insurance only. So like a Niva, Star, these are only health insurance companies. And then there are general insurers who give other kind of insurances as well, like an HDFC and so on. So now the question is, how do you identify which companies to go after from these 30 companies, right? For that, you will have to look at my Excel. Here, let's go through this together. So basically, these are the list of all the companies that we have, and there are 3 different parameters that I've looked at. This data is from IRDAI, which is the insurance regulatory body, from December 2024. It's widely available on the internet. I will also share this spreadsheet through the link in description, so you have this with you for the rest of the year, and you can take your own decision. But I will tell you what my parameters are, right? Let's start from column B, which is 3-year claim settlement ratio. What this means is that over the last 3 years, how many claims were settled by this company as a percentage of all the claims that were submitted to them. Pretty simple, right? You want a company to be making sure that they stand up to their promise and therefore they're giving those claims. So this is the definition: claims settled upon total claims averaged over the last 3 years. One quick call out: when you go on these insurance policy websites, the numbers you see there will be much higher because they are not aggregated over 3 years. They're actually aggregated over a much shorter time frame to play around with it, right? So they're making you biased that we have very high claim settlement, but you should look at it a longer time period. Before we proceed, a quick shout out to today's sponsors, Ditto. It's a platform I have used personally. It's a happy coincidence that they're also sponsoring today's video. Ditto's spam-free advice has really helped me in the past. They're unbiased. They listen to my scenario and then they recommend a policy that works for me. They're also really good in terms of their relationship with all of these companies, and so they can help you with your claims if you so need it later on, all free of cost. One feature I really like about them is that you can chat with them on WhatsApp for all of the different queries that you have, and it's spam free. You do not need to pull out your second phone in order to avoid that spam. So go check out Ditto, link is in description, and thank you Ditto for sponsoring today's video. We have all of these companies here. I think needless to say that the companies right at the bottom here, Raheja, Navi, Shriram, Cholamandalam, Star, all of these with like really bad claim settlement ratios are out of the picture, right? Gaurav wants assurance, he wants peace of mind. These companies promise anything but that. So I'm going to completely, controversially, even Niva, Bupa, Care, I'm not going to look at them. My criteria is at least 95%. I'm not even going to look at these 90%ers. I know some of you could disagree, but this is my video, my criteria. So that's how it is. I'm going to look at 95%, right? So that opens up, with the first filter, we are at about these 11 companies, okay? Next, let's look at this other metric called incurred claim ratio. This is another fun metric that I found, but basically what this means is that the amount of claims paid upon the amount of premiums collected in a financial year. So if as a company you have collected premiums worth 100 rupees, out of that 100 rupees, how much are you actually giving back to the policy holders in the form of claims? You don't want to be giving way too much because say if you are only collecting 100 and giving away 106, hint, hint, that's taxpayers' money. So, and that's why you see a New India Insurance here giving 111% as incurred claim ratio. They don't even have the 11% to give. So, whose money are they giving? They're basically being floated by the government. And again, controversial. I would assume they're being floated by the government, but they could have other loans and other debt. I don't know how it's working out, but it's not a good indicator. Similarly, this other government company, Oriental Insurance, 124. That's ridiculous. If I were a shareholder in this company, I'd be really worried. So again, I would stay away from companies that have a really high incurred claim ratio because solvency becomes a little bit of a challenge, though I'm sure these companies are not going to go anywhere. But again, it just doesn't give me the comfort. So I'd stay away from these ones which are 100. The other end of the spectrum of incurred claim ratio is companies that are not giving claims at all. And over there, if you look at some companies like, look at this, Niva Bupa, 58%. So that's too low. That means they're really like holding back and they're really trying to make money here and not giving out claims at all. So this 58% is not a good number either. I think my sweet spot is somewhere around 80. If you're as close to 80 as possible, plus minus 5-10%, I think is great. And so with that, like these pink colored, like Bajaj Allianz at 83, Acko at 82, Tata AIG at 81, HDFC Ergo at 86, SBI at 81. These are good policies. Like they have a healthy incurred claim ratio and they are also not overextending themselves and overstretching themselves by giving out way too much. So they should be solvent. There is the third fourth metric we can look at, which is solvency ratio, but I didn't want to look at it because it's too complicated. So yeah, let's keep it simple. I am of the opinion that I'm going to take out all of these companies here which have really high claim ratios from the 11 that we chose earlier, and we are not going to look at them, right? So on incurred claim ratio, just rounding out, so I'm basically going to be looking at companies which are close to around 80. I think that's the sweet spot that I want to be around. Finally, there's a lovely metric called average complaint rate, which is very important. I'll tell you for two reasons. One, it tells you the actual numbers. In 10,000 claims, how many complaints were submitted to the regulator, to the ombudsman in insurance. And companies are scared of this because the minute you lodge a complaint, it gets recorded officially and then the data is released, and then people like us see that data and make a decision, and that basically impacts future business prospects of these companies. And therefore, I think what's happening here is that you don't want to be in a company that has a very high average complaint rate. Now, the industry average is around 22 out of 10,000. And so that's like an Aditya Birla, which is just at the average. But the lower this is, the better, right? So the darker the green shade here it is, the better. New India Assurance has really low complaint rate. No surprises. You're giving out so much claim. Why will people be complaining? But it's a good thing that they have a very low complaint rate. HDFC Ergo within the private sector actually has the least complaint rate among the policies that we selected in the first half. So that's really good. We look at others like Aditya Birla has 22, Universal Sompo has about 21, Bajaj Allianz has 8, which is also pretty good. So I think it gives me some confidence that there are some, like Aditya Birla is just on the edge. We will look at Aditya Birla policies. But yeah, just keep in mind that the complaint rate is at about 22. Before I move forward, I also want to say that data tells only half the story. The other half of the story is going to be in the comment section. And therefore, please go through the comments. One, see other people's experience with all of these policies. Two, if you have an experience with any of these policies, do share them with the wider community. It will help everybody know which policies and how your experience has been. And hopefully people who are looking for health insurance policies can actually benefit from that experience sharing. Thank you to those of you who are actually going to share your experience. Okay. So those are the companies, right? These are the broad companies that we are looking at. Now let's get into the policies of these. In addition to these companies, I'm also going to cover Niva Bupa in Care, only because a lot of agents and advisors are going to be selling you these policies, and therefore it's important for us to understand these policies, right? So now we move on to the second tab, which is policy. Remember, you have all of this data. You can go through this data in your time and make sure you make the right decision. So, okay, let's go through them. These are the companies, and these are all of the different factors that we've taken into account, right? Company, I'm not going to sweat over, but like 1 crore cover, are they giving a 1 crore cover or not? New India Assurance doesn't have a 1 crore cover. From my research, it looks like the maximum they have is 50 lakh rupees. So we're not going to be considering them. You have the details here if you want to go through it, but we are not going to be considering it. Next, HDFC Ergo. Basically, all of them have a 1 crore cover except IFCO Tokyo and New India Assurance. So that's good. Number of cashless hospitals in Gurgaon, again, no standouts here, except I think Niva Bupa and Care actually are on the lower end in terms of the number of hospitals they have, cashless hospitals. One tip here, if you can afford to do reimbursement, do that over cashless. Usually, hospitals do not recommend the best treatment, and I learned this from Mandeep from Labor Law. Hospitals are not incentivized to be recommending the best treatment, even if it falls under your policy, if it's a cashless. And therefore, if you have money in your pocket, do reimbursement and then basically pay the bill on your own and then claim reimbursement from the insurance company. But I've anyway looked at, because this is a large 1 crore policy, a lot of these will be cashless. So let's look at cashless, right? So basically, all of them seem to be good on cashless, except Niva Bupa Care and Ifco Tokyo, which are slightly on the lower end of the spectrum in terms of the coverage. So now next we have this policy names. These are all of the different policies that we've looked at. There are 15 of them across these different insurance companies. I've actually looked at multiple policies from Aditya Birla and Tata AIG. We'll go through those in greater detail. But before that, what I want to cover are the different criteria that I've used to evaluate this. And the more the green here, the better, basically. If there's a policy that has all greens, that's amazing. And so think of it this way, that disease sublimit basically means that what is a different claim limit for different diseases. Straightforward, right? Like if, for example, you have a 1 crore policy, you get a disease, that disease should not have a separate limit of say 10 lakh rupees, because then that defeats the purpose of getting a larger policy. So you don't want a policy that has a sublimit on a disease. Next, room rent cap. You do not want a policy with any room rent cap. You want the policy to allow you to get any room that you like to make sure that you can get the treatment that you want. Third is copay. Copay is nothing but like a sharing of bill. If you go out to eat, you share a bill. Similarly, in copay, if you go to the hospital, you don't want to be sharing your bill with the policy. The policy is supposed to be paying the entire thing. So no copay is preferred. And finally, consumables coverage like PPF kits, masks, gloves, etc. In a lot of the bills, consumables is what is really, really important, because it ends up eating into a large portion of the bill. So you want to make sure that your policy covers for consumables as well. Right. Finally, there's waiting period, existing illness. I've not included this because in Gaurav's case, there are no existing illnesses. So we are not going to be looking at it, but I've left it here anyway in case you're looking for it. You can do it. Now let's look at that. What are the policies that are basis these 4 criteria? What are the policies that look good? First is HDFC Ergo Optima Secure. It is green across all 4 boxes. Looks good. Digit, not good. Consumables coverage is not available in the super care option. And then there's copay, which is zone-wise copay might be applicable. Oriental Insurance Youth Eco Care Basic has a room rent cap and does not include consumables coverage. It's out. Tata AIG is an interesting product. They have 2, Medicare Premier, which is a really premium policy. It is a decent policy. It's expensive, but it looks like a decent policy. The second one is Tata. How expensive, by the way, we'll get into that in a minute. But both Tata AIG policies seem pretty decent to me. The Medicare Premium and Medicare Plus. So we will go through those. Acko Platinum, again, seems like a decent policy. We'll get into the waiting period, but essentially the big value prop of Acko Platinum is that there is 0 initial waiting period, and then there is a 0 to 4 years pre-existing conditions and 0 for specific illnesses. We will cover this in greater depth shortly. Ifco Tokyo, not a big fan. There's a disease sublimit and there is a room rent cap. Aditya Birla, again, good on all factors. It's green across. Universal Sompo has disease sublimit here. So again, there are yellows here. I'm going to skip this. Bajaj Allianz has a single private AC room in its My Healthcare policy. So I'm going to skip that. Niva Bupa, I don't like for 2 reasons. One, if you go back, you will see that their claim settlement ratio is in the early 90s. Their incurred claim ratio is really low. Their complaints are really high. Look at this, 43 out of 10,000 and 36 out of 10,000 is a really high rate compared to the industry averages. We want peace of mind, we want assurance, we do not want complaints, and therefore I would not recommend Niva Bupa or Care for anybody who can afford a premium policy, right? If you're in the market for a premium policy, just stay away from these brands is my recommendation. I'm no expert. So we looked at these 2 policies, and even here you need to get an optional rider for consumables coverage, which is not ideal. And ICICI Lombard, this policy called Elevate, has a single private AC room restriction and needs an optional rider for consumables coverage. So that leaves us with about 4 to 5 policies in terms of the ones that we can go with: HDFC Ergo, these Tata AIG, and the Aditya Birla policies. These are the ones that we will evaluate in the next tab. Before we move there, I also want to cover the premium amount for these policies, right? Now, the premium amount for HDFC Ergo for 1 crore for 2 people, 35-year-olds and 1 2-year-old is 47,789. Here's a trick on how you can save on this premium. One big feature of HDFC Ergo is that you get 2x coverage from day one, which means that if your coverage is 50 lakh rupees from day one, you get a 1 crore premium. That's a great thing because now you can actually buy a 50 lakh rupee cover, which costs you 40,959 and you're covered for 1 crore. The second thing is there is this concept of aggregate deductible. What that means is, and I have said this repeatedly, and I'm going to say it again, some of you might disagree, but the way I think of health insurance is that smaller expenses like 2 lakh, 3 lakh, even 5 lakhs is not going to break your back. It's the larger expenses that are going to lead to financial ruin. And therefore, I personally believe that taking an aggregate deductible is not a bad thing. Take it till you can afford it. A couple of lakhs here and there is not going to make a big difference. And so take an aggregate deductible of say 2 lakh rupees, and that would really bring down your policy amount, the cover amount to like from 40,959, it comes down to 24,576, which is crazy. Just because you added an aggregate deductible there. HDFC Ergo allows for an aggregate deductible. Not all policies allow for it. So the trick is get an aggregate deductible if your policy allows for it for 1 lakh, 2 lakhs, whatever, and save more premium on it, right? So technically we get to about a premium for HDFC Ergo at 24,576, Optima Secure. Next, Digit we are not evaluating, but this is the price. Tata AIG, this is the other one, Medicare Premier, which we spoke about. I'm going to freeze this column. Okay, I'm going to hide these two columns. So now let's get to HDFC Premier, Medicare Premium. I told you this is an expensive policy. 54,618 is the premium for this. Quite expensive. It has a deductible of 50k. So if you add that 50k deductible, 54,618 becomes 52,861. The other notes here are that 50 lakhs per year renewal bonus is there up to a max of 1 crore. It has worldwide coverage. This is one of the few policies that gives you worldwide coverage. It has a great restoration benefit. I do not want to get into restoration benefit, get too complex, but check it out if you're interested. And it has bariatric and maternity covered. Again, things that most other policies are not going to give you. So this seems to be like the absolute creme de la creme in terms of the features it's giving you, but it's also fairly expensive. So if it suits your purpose, go for it. The policy wordings are also here. By the way, as a part of my research, I actually put a lot of the health document policies here in Notebook LM. You can see this screen here. You should check it out. It's notebooklm.google.com. You can upload policy wordings and then you can start asking questions from Notebook LM. You can make a podcast here and then you can hear them talk about the policies. You can ask questions. It's super fun. Never did anybody say policies are super fun, but anyway. Getting back to this, right? So, yeah, that's there. Then we have Medicare Plus. This is a lower variant of Medicare Premier. The premium is also much lower. It's 24,655. If you put a 3 lakh deductible, the premium becomes 21,352. No restoration benefit is the problem with this one, but worldwide coverage is there. So Acko Platinum, a very popular policy, very cheap, 25,458 for 2 35-year-olds and 1 2-year-old. For the year. Aggregate deductible is not available in this one. So basically you are covered from 0 rupees. The only thing in this is that they do not give it to everybody. They will get a medical test done for you before they give you this policy. If you don't qualify for it, then they will not give you this policy. Aditya Birla has two, Aditya One, Active One Next and Active One Max. Key difference between this is that Max gives a bonus of 100% on renewal up to 5x and Max has a 2x cover benefit. So again, you can take a call on these two. I personally am not a big fan of Aditya Birla. I will cover that shortly. But my reason for that is this. 22 is not a good enough number. Why will I pay 38,000 here to get either of these policies and not instead get an HDFC Ergo at 24,576 when it's meeting my purpose, right? So it serves my purpose. I would go for that as opposed to these. So therefore, the shortlisted policies for now are here, right? Just to make your life simple, this is the last tab, I promise. But the shortlisted policies here are, there is HDFC Ergo, there is Tata AIG, Medicare Premium, Medicare Plus, Acko Platinum, and Aditya Birla Active One and Active One Max. You can get any of these policies. They're all pretty decent. The only thing I want to call out is two caveats. One, in fact, let's go one by one for each policy, right? HDFC Ergo is a general insurance company. They do not have too many options. Optima Secure seems to be a good policy, matches all our boxes that we want to do. It basically has everything that we need. Existing illness cover is 3 years. If any of you have it, in our case, we're not looking at that as a criteria, so we don't really care much. With a 1 lakh deductible, the premium is 24,576, which is pretty compelling. And yeah, that's my personal choice is Optima Secure out of all of these. Tata AIG, Medicare Premier and Plus both seem okay to me. I don't see much of a difference. They both give the restoration benefit is not there in Plus, but I think they're both pretty decent. One thing to look out for is that when you Look at Tata AIG's this year's claim ratio, like the last 3 year claim ratio is 96%. But if you look at the year prior, if you remove the immediate last year, 2024, and you look at 21, 22, 23, then this claim ratio is actually much lower. So that's something to keep in mind, that there's a little bit of a recency bias here. But if you are okay with that, I think you can do this. If there are any people in the comments who can leave their experience on Tata AIG, that would be super helpful. Acko Platinum, I just want to point your attention to this one little snippet that I found. I think I found this on Acko's website or on Ditto, I don't know. But essentially what we're saying is that to be eligible, your family must go through detailed health tests in a lab to detect and evaluate any pre-existing health conditions. And if you have any of those, then we will offer you the standard health plan and not the platinum health plan. So that's something that you should keep in mind as you evaluate Acko, but otherwise it's not bad. Last, Aditya Birla, one thing I found out here was that the aggregate deductible cover is only on the Aditya Birla website. So you have to go sign up on the website and then do it. So that's where we're at. I have the HDFC Ergo Optima Secure. I'm happy with it. But here are some other policies you can consider. So that brings us to the end of today's video. Hope you found that useful. If you want that spreadsheet that I just presented, just follow the link in description, go to my newsletter, sign up, and I will send it to you. It's for free. You just need to sign up for it. Gaurav, I hope you got your answer. If you didn't, and if your scenario varies from what Gaurav's is, you know who to call. Ditto. They are spam free. They are unbiased. You can get to schedule a call with them or chat with them on WhatsApp, and they help you with your claims all free of cost. I have personally used them. I would highly recommend them. Also, a quick caveat, while Ditto sponsored the video, the insurance policies that are recommended are based on my research. Ditto has no role to play there. They are not influencing those policies in any way. I just want to call it out. Lastly, please drop a comment if you have any of these policies. If you have an experience with them, data tells only half the story. I want to make sure that the qualitative aspect of these policies is well captured for all of those who are viewing this. I would highly encourage you to please drop a comment about your experiences with these policies. Thank you. See you in the next one. Bye-bye.